In this video we will talk about how to make $100 a day by crypto trading, how to do so successfully, and how the strategy work. So make sure to watch the full video. Hi guys! Welcome to a new video from Cryptoers1, the YouTube channel where you can find all the news about crypto, NFT, and blockchain. Every day a new video, follow us not to miss the news. How to make $100 a day by crypto trading. I have been trading cryptocurrencies on Binance for a few months now. As a beginner, I can tell you that it has been a roller coaster of super crazy highs and even more super crazy lows. I have watched some crypto pairs rise 11,000%, 800%, 200%, and even 5% on some days. At times I have managed to multiply my money 400% in a week and then proceeded to lose all these gains the next because of the high volatility of cryptos. I am not a major crypto hodler simply because I cannot afford to. I do not have extra money that I can put there to sit around as I wait months or years, even for it to rise, and for me to watch it go through these crazy highs and lows. Money is super tight, especially in the second year of a global pandemic. And I need my money to be circulating in and out of a venture for it to best benefit me and my situation right now. For these reasons, I needed a strategy that could best suit me. And after some experience, I came up with this one. I trade my crypto on Binance. After a few months of interacting with the platform, I noticed that at least 50 different trading pairs manage a 10–20% rise daily. Some even go to crazy highs of 800% in one day on some occasions. Some selected few manage 100% rises, while others do between 40% and 80%. My focus at this point is usually on the ones that rise 10 to 20% daily, as they are the regular occurrences and the purpose for this story. This strategy applies only to spot trading. The strategy. Scenario 1. If you put in $1,000 on Binance and track a 10% rise on one pair, you will have made $100 repeat this every day, and you will be making $100 a day every single day. The above is a screenshot taken today, 29th October 2021. As you can see, several pairs rose at least 10% today. And this happens every single day. With your $1,000 investment, you only needed to pick one pair that pleased you and you felt comfortable with, buy it, wait for it to rise at least 10%, then sell it. You can even set a stop limit price on the platform that will automatically do this for you. You just put in the price you wish to exit at and the platform will sell for you. You will exit the trade with $100 profit, give or take, as you still have to pay trading fees. A 10% rise in my experience can happen in about a few hours or less than a minute, even depending on the volatility of the pair you chose. On some lucky days, it happens within the first 10 minutes. You make your entry and exit, make your money, leave the platform, and move on to other things until the next trading day. Scenario 2. If you put in $2,000 on Binance and track a 5% rise, you will also make $100 per day every single day. With $2,000 in, a 10% rise will guarantee you $200 daily. Scenario 3. Put in $500 on Binance and track a 20% rise, you will make $100 daily. Remember that they are maker and taker fees that are deductible by Binance for facilitating these transactions. Why put in more money and not less? Imagine putting in $200. For you to make $100, you would need to trade a pair that would rise 50%, which is much rarer than a pair rising 10%. Again, with $200, you would need to trade at least 5 different crypto pairs rising 10% a day to make your minimal $100 target. This can be exhausting as the different pairs could be rising at the same time. It could create confusion on which one to choose, which could lead to mistakes that will lead to losses. Putting in at least $1,000 for this strategy is much safer and less taxing. The more money you put in, the easier it is to make a profit, and the less taxing it is to find different pairs at different times to turn in $100 a day. A $5,000 investment with a 10% profit strategy could give you $500 daily. Neat, right? Stable coins. Make sure that you are trading your crypto against a stable coin such as USD, BUSD, Bitter, GBP, etc. That way, after exiting a trade, you store your money in a currency that won't change in price until you decide to trade again. You don't want the surprise of finding that your $1,000 turned into $340 overnight after storing it in Dogecoin. Remember that your $1,000 using this strategy is the investment that will make you $100 a day, so you must make sure it remains intact. Of course, there is some probability that Dogecoin could rise during that period, which could mean more profits for you, but that is not the strategy here. Remember to withdraw or transfer your daily gains if you do not wish to reinvest them. After some days of using this strategy, and after a thorough understanding of it, you can adjust your profit margins to 15% or higher to make more money per day. Trading fees. You can also learn to trade past the 10% mark, maybe 12 to 14%, to allow some room to make the extra money needed to pay the trading fees. This will ensure that your initial $1,000 investment remains intact. But this is after you have mastered the strategy. Alternatively, you can set aside some money in BNB if you are using Binance, which will not only lower your trading fees, but will also ensure that your $1,000 initial investment remains intact and that the trading fees are not being deducted from it. Benefits and disadvantages of this strategy. The benefits of this strategy are: 1. You will not be subject to the sharp drops of cryptos, which will help keep your initial investment intact, as you only buy during a rise and sell after your 10 to 20% rise. You exit immediately after you make your money and are cushioned from potential losses due to these sharp drops. As a disadvantage, buying and quickly selling day after day will lead to you paying more fees, as you are charged for every time you buy and every time you sell. Also, after targeting only a minimal rise such as 10 or 20%, you might miss out on profits in case the crypto pair you chose rises to 30, 50, 100, or even 200%. Storing your money in a stable coin when you are not trading will also prevent you from making potential profits had you kept it in a coin that rose in value during that time. You also miss out on the power of compounded interest, as you only buy a rise and don't allow your money to multiply. This is assuming that even after you gain your $100 on day 1, you trade $1,000 on day 2 and not $1,100. Can the strategy work? Yes, the strategy can work, but only if you stick to it, as human emotions and your greed ratio can interfere with your trading strategy. Self-discipline is super important here, but only to the extent that it makes sense. Tact is also paramount in this case. Imagine a scenario where you set out to trade a 10% rise only. You put in your $1,000 you buy and sell after a 10% rise, then sit it out. But the crypto pair continues to rise up to 50%. Had you waited before selling in this case, you would have made not just the $100 you initially sought out to make, but $500 on that day. So tact is very important. That's why a proper understanding of technical analysis is important for a crypto trader to gain maximum returns from their venture. In this specific scenario, for example, a skilled trader would not only make the initial $100 that they sought out to make, but an extra $400 minus the trading fees, of course. The point is they would still have made their daily $100. How to do so successfully? Of course, making money and the promise of quick returns after some little effort can make us super greedy. Check your greed. If you intend to only make $100 or $200, stick to that. Keeping your money in after you have made your desired target could lead to you witnessing a sharp drop that can make you lose not just your daily gains but even your initial investment. Stick to your strategy. Again, together with checking your greed, stick to your trading strategy. Of course, you would wish to make more, but after you have made your targeted money, have the courage and personal discipline to safely get out of the trade. A sharp drop could make you lose all your gains, which is super frustrating from personal experience. Better to walk out with 10% gains than to watch all you have made, including your initial investment, disappear into thin air. Tomorrow is, after all, another day to make another $100. What do you think of our video? Let me know in the comment section below. If you enjoyed this video, make sure to hit that like button. Also subscribe to our channel before you go. Thank you for watching.